Hey everyone, this is your market analysis for August 4th, 2011. My name is June, and I have Chris here with me.
Hi, everybody.
Okay, so what happened today? A whole lot of selling, that's what happened. I guess that was an understatement. Uh, Geez, I mean, the last time we saw this much selling was back in 2008, and the market basically just tanked today. What else can I say? It broke the head and shoulders that we talked about the other day, right over here. And it basically never looked back from that point on. Now, to say that things are getting pretty extreme is an understatement. I think we are getting very extreme. I mean, if you look at the moving averages in comparison to where prices are, we are very stretched out. Now, obviously, I'm not saying it can't get more stretched out or it can't go lower, but there's only a certain point where enough is enough. And today might be one of those days where it's a massive sell-off capitulation day, where we might be hitting some sort of a near-term bottom. You can see that SPY here. On SPY, I'm looking at it. Stopped at 120, okay? Basically right at 120. So could we see a rebound? Who knows? The only thing is, I think right now the market's so extreme to the downside that it can snap back easily, okay? So you just got to be careful with that. If you're going short, I think today would have been a good day to take profit on those short. And if you haven't exit your longs, then if you're willing to bear and grin it out, I think there could be a decent sized rebound coming soon. Now, whether it will come back and retest this neckline, that's hard to say, because that's a pretty big size rebound for it to come back all the way up here. But nonetheless, I think it has to at least try to allow this 20 moving average to come up or come down to meet it. So let's jump into an hourly view to see what else is going on. This is where it's very important to look at different time frames, and I mentioned this before, where you look at the daily view, the market's down or a stock is down, and then you have to look at, okay, well, yesterday we had a decent rebound. It formed a hammer, right? It formed a hammer. But the thing with that is it only rebounded back to this 20-hour moving average, right? And it followed straight right there, followed flat right at the 20 moving average. So you can see that the 20 moving average is acting as resistance. So I would think if we do get that rebound, like some kind of rebound, then I would think that 20 moving average would be your first line of resistance once again. And if we breach above it, then that means we can get a pretty bigger rebound. Just like here, how on the upside it uses the 20 moving average, the hourly moving average, as a good pullback level. Okay, so even on the short-term hourly view, things are getting very, very extreme out there. Okay, so just be careful if you're shorting, and then if you're long, get ready to jump in if you want to go long in this market. But if you do, only for a quick rebound. Okay, because this market has obviously changed trends. You can't say this is an uptrend anymore. We've definitely have changed trends. The psychology is different. The price action is different. It's definitely more intense, more severe. And I mentioned, if this is not your environment to be trading, you shouldn't be in this market at all. Okay, because this is a very violent and tough market to be trading, unless you're day trading or whatever the case is. But if this is just too much to handle, definitely stay in cash. That's my best advice that I can give you. Going into the VIX real fast, no need to say it, but yeah, we had a huge spike in the VIX. Obviously now we're up in the 30s. So I mean, what's there to say about this other than extreme fear is coming into the market? So again, when the VIX is high, then that's a good sign that the market is hitting some sort of a near-term bottom. So just watch out for this. If the VIX gets any higher, then the market is really, really extreme out there. Now, with that said, usually with a high VIX, that correlates to high premium, because volatility is a formula, part of the formula that makes up option premium other than price and time. So you can imagine with a huge spike in volatility, the option premium, basically every single option out there are inflated right now. Okay, they're pretty much in fat, juicy premium. So, Chris, I think you have something to mention about selling premium.
Yeah, when the VIX spikes pretty high, like especially like today, and there's a lot of fear. We don't want to be like everyone else on the floor and be scared of everything. We want to look for opportunities. And when the VIX spikes up so much high, there's a lot of opportunities out there. Like June said, the option premium just gets so big and juicy that because so many people are afraid and they're panicking right now, we could take advantage of that. Just as an example, I was taking a look at Google, and I was taking a look at some of the bull put spreads that's on Google right now just for August, which will expire in about 2 weeks. And Google closed at 577, and you can actually do a bull put spread at the 505, 495 strike. And this is just being conservative, by the way, because you could probably spread even lower, maybe the 495, 485, and that's amazing that you can spread more than 70 points, or not 70, yeah, about 70 points away from where it's at right now. You know, Google could drop to that, but it's really hard to say. You know, and the markets never go straight down. So that's just an example of a lot of other things that we want to take a look at. You know, June had some stuff on SPY. It was too bad that the weekly options didn't go down that far on the SPY, or otherwise we would have probably done some bull put spreads with inflated premium right under SPY for this week.
Yeah, this
but I
week.
believe that there's some. Go ahead.
This week, yeah, there's nothing this week. Next week, maybe, if you're willing to be that close at 117, 115. But I don't know. That could be pretty close. And then if you go all the way out to the actual month of August, I mean, look at this. I mean, premium, if you look at it, you can get all the way down to, heck, even below the chart here at 114 for what, 25 cents, 29 cents? So, I mean, yeah, the market, I mean, do you see the market basically dropping down to this level within a few days? I mean, yeah, it can actually, but will it, probability, maybe not as high. So that's where you kind of have to take your chances. I think selling premium when you're selling that far away, you're banking on the fact that the market is so stretched out that it just can't really get to that level within that specific period of time. It's different than buying stock. If you're buying stock, you're basically saying this is the bottom right here, right now. Right? So there is a difference between calling bottoms and tops. I much prefer doing it by selling premium because at least that gives me some buffer. I say some room for error, basically. So, and I'm still able to at least capture some premium as a result of this oversold condition and extreme condition. Okay. Anything else you want to mention today, Chris? Because
yeah, sure. I mean, I don't really have any stocks that I'm taking a look at right now because of the market conditions. But I can talk just a little bit briefly about the stocks that I actually posted last Saturday for some shorts and some longs. And actually, all the targets were hit today. If we take a look at Alcoa, you know, I had a short right under 1450. My first target was 14. The second target was 13. It was just amazing how, you know, the target was hit about 3 days later. But I mean, it was just an amazing thing. Next stock that I also had a thing on the downside was DE. And DE, I had a short under 77.5. And when it was at 75 yesterday and formed that hammer, I took some profits. But I still had some on to run. And then my next target was around $72, I think 50 cents, or $72.60. Second target was hit today, so I was out. I mean, but just is an amazing thing. And then last, if we take a look at EXPE, Expedia.com, I really liked it from the upside because of the nice earnings and the breakout. And I actually, on the market analysis yesterday, it was mentioned I'm probably going to take some if it gets above yesterday's high. And today, because I was already stopped out, and it didn't get above yesterday's high today, so I wasn't able to jump in from the long side. And we see that the big black candle today that followed along with the rest of the markets, it kept me out. So really, all I had was some shorts, and just all of them already have taken profits and hit their targets. And so right now, I'm not really looking at shorting them even more because prices are so stretched out.
Actually, you brought up a good point regarding a hammer, or regarding any reversal candlesticks for that matter. Yeah, we did pull in a hammer yesterday. But the thing about reversal candlesticks is you always need that confirmation. I mean, the reversal candlestick, when you see it like this hammer, it's basically an alert. It basically tells you, okay, be on the alert, because this thing can reverse any time. And the sign or the entry to go in is above the hammer. And unfortunately, we never got that. I mean, we gapped down and never looked back this morning. And so, sometimes entering early can benefit you. You might get the extra profit because of that, but sometimes it can really go against you if you enter prematurely without that proper signal for you to go green on any stock or even the market. So that's the thing. To really pay attention to is if you see a reversal candlestick, just be ready to go long. I mean, if you're conservative, I wouldn't go long just because you see a hammer. You want to see it trade above that hammer as a confirmation. Okay, so that's a safe way, a much safer way of getting into a stock or trying to call the market in that sense. But pretty much like Chris said, I really don't have anything for you guys to look at. If you want to play the rebound, like I said, you can basically pick any stock at this point and that you like and just play a rebound, because I think most of those stocks are pretty damn oversold already. I mean, even something as like silver, where it was behaving nicely, it got hammered today. I mean, this is a huge bearish engulfing pattern on high volume, so I think silver might be experiencing some pullback. And overall, I think silver, I don't think it's ever going to come back up here anytime soon. I think this is just, it's going to be in one big consolidation range for quite some time. So, you got to take that profit when you hit it, especially when it fails to hit that target where we said at 42.5. But once it hits that 40 target and once it comes back down, that's the time to get out. So, and also if you're in gold, same type of deal, huge bearish engulf on high volume, on overbought conditions. So there's a good chance that gold might be also pulling back in the near future as well. So nothing was really safe today, to be honest. I think everything just got hammered left and right. So that's panic selling at its best for you. When everything is just, at extreme levels and everyone's just fear and just runs the market at that point. There's really no rational thing to say, and there's really no support, to be honest. I mean, support gets broken easily when people just want to sell and dump. So they're not thinking on a logical, technical point of view. They're just thinking, okay, how the hell am I going to get out of these positions? Let's just dump it. All right. So that's pretty much it for you guys. I mean, today was a pretty brutal day, and then Friday we'll see if we can get some kind of rebound, some kind of pullback, just to relieve some of this extreme condition. But again, don't be surprised if we keep going lower either. So we have a quick reminder. We have a webinar this Saturday, and we'll go into a little more detail about the market, and we'll see what happens tomorrow, so we can talk more and see what we can do when the market's in this type of situation. Okay. All right, guys. Well,
June.
Yes.
I actually have some words of caution for our members out there.
Yeah.
That since the March 2009 lows, I've been getting a lot of email, especially in my junk folder, for the last year and a half or so, about how to protect yourself from the upcoming market crash. And I've been getting that like almost every day. It's all in my spam folder, stuff like that. And then today it does a 500-point drop in the Dow. It could be considered a crash to some people. And those are probably the same people that were saying how to protect yourself from the upcoming crash. So don't get really fooled into anything like that right now. They couldn't tell me when the market was going to crash, how it was going to crash, all that. is to protect yourself from the upcoming crash. And then today, and now they all look like they're geniuses or whatever. Just my best words of wisdom and caution is just try to avoid things like that.
Cool. All right, Chris. Thanks. All right, then we'll talk to you guys at the webinar this weekend on Saturday.